Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. We're going to do our daily technical analysis update today. I'm going to give you my financial opinions, and we're going to work our way through the dollar, yields, precious metals, and commodities. At least the ones that I follow, I say that every time. If you guys want to join our community over at finding-value.com, love to have you there. We are looking at different investments, looking at individual particular companies, looking at different sectors. And we do go over the market conditions like we do in a lot of these daily updates. So let's dive in. Let's take a look and see what's going on. We've got, I'm going to start with the DXY. Big, long, big picture view. We are bouncing off this support level that goes all the way across. I know some people say it's not at the peak here. Well, it's wherever there's buyers and sellers that have traded, and basically where that price comes down and gets caught in the buyers and sellers volume. And that's where we are today. So the DXY, we've been bouncing off this general vicinity or level, and it does look strong for a move higher in the DXY. And this does not mean that the dollar is going to absolutely get stronger. It just means that it's going to get stronger against other currencies. And when that happens, we can see certain assets become more favorable than other assets. It may also mean that people are running into dollars versus other currencies. It's another function that we can see of the market conditions, or another way to see it. More data. So the 10-year yield, it bombed out today, down 3.38%. That's a pretty big down day for a 10-year yield. So we're heading lower there. We also saw a large down day in the 30-year back to that support level. We're watching this because if we lose that support level, we're going to see yields drop. When yields drop, what does that mean? It means that people are running into bonds. They think that a recession, a slowdown, a crisis could potentially come during these market conditions. So generally speaking, if we break down here and head lower in the 30, in the 10, in the shorter end of the curves, if this really starts to dive bomb lower, more than likely there could be a problem in the markets. That's signaling that a new market condition is coming. And that new market condition, if yields were to drop, most likely will be very favorable for precious metals. So we should be seeing precious metals also strengthen as yields deteriorate. And that is telling us that a market condition is changing and that we could see a potential problem in the market. Bond prices moving up, obviously they move inverse to yields. And one of the metrics that I follow is the TYX-TNX ratio. When this ratio is low and it starts to move higher, that is when precious metals generally do very well. We can see on the short term here, we were up 1.4%. This is a breakout to the upside. If you do a crude just line draw there, I think we're probably going to go higher, and I think yields are going to go lower. This ratio to go higher is what I'm saying. And this is the ratio. If you look over time, I put these different color vertical lines in here. If I were to just put gold and run gold in a new pane underneath, you can see that when we go from low to high, gold goes from low to high. You can see that when this ratio goes down, gold does not like that. It usually consolidates low to high, low to high. And then now gold's starting to take off and we are going from low to high. So that is what I'm basing it off of. It's basically the uninversion of the yield curve. When the yield curve uninverts, you're transitioning from an inflationary worry to a less inflationary worry or a potential problem in the markets. And that can be seen by how the yields are behaving on the short end of the curve. So when we look at the short end, the US 2-year yield, we can see it's dive bombing lower. We've struggled to make progress higher, and we're still dive bombing lower. if you back out and you look at the 2-year yield, we've broken to the upside, but that doesn't mean we go straight higher. We can obviously come back and do a retest or something like that back here or even back here, and then work our way higher. So that is where I think we're at. And you can see that we're basically rolling over here, and maybe where I drew this is more like that. It could be where it's a shoulder, head, shoulder with a neckline here, and that we're going to come back down to this area down here. Could be the case. And again, I don't know that that's 100% probability. It's nothing like that. I'm just telling you what could potentially happen if the selling pressure starts to pick up. And if we break this kind of neckline in here, that is where we could start to see an acceleration of yields going down, and people start to potentially have panic or fear in the markets. And we could come back to this support level and then put in a wave 3 big old leg in commodities. Again, I don't know the path. This could be a potential. It may not. Looking at, we got the US 2-year, 10-year as well, and see how this is breaking to the downside, guys. We're right here ready to break out of this pattern to the downside. So I do think we could come down to this area down here in these rising wedges, which are generally bearish, and we enter this with a lot of momentum. So I do think that this has a high potential to go down in the short term. Basically, the curve inverts going this way. It uninverts coming back down. Very positive for precious metals. So CRB index, we're coming back down. I know some commodities had some selling pressure today, especially oil, nat gas, stuff like that. I think nat gas was down a little bit too. So we're down today a little bit in the commodity index. And again, I'm not too worried here, and we could very well have a larger pullback in commodities in the short term. Long term, there's way too many supply issues in commodities for this to stick around forever. Any money that gets printed, any money that comes into the system, which they have to do in order for the system to survive, it's got to be inflationary. They got to increase revenues, tax revenues for states, for Federal Reserve, and they're going to print money to cover the difference for the interest payments on the debt that we do have. So they're kind of screwed. I'll just say it that way. But right now we are coming on back. CRB to S&P 500 is flat today. Looks like the S&P 500 is down if commodities were down. That's flat. Gold up a little bit, $7. That's that curve that's coming back up. We also had higher dollar. And that's usually kind of weird to have a higher dollar and far lower yields. But maybe people are running into dollars, something like that. But that's gold right now, up a little bit. Silver, slightly lower, but we had buyers come in. That's what the wicks are at the bottom down here. There's some support down there. And then platinum, basically flat for platinum. And we could be doing a retest back in this general vicinity down here. Maybe we already did it. And we're going to start to move on up. But platinum, silver, and gold are all sitting on top of these big patterns, doing their retests right now. Gold is as well. And we're probably going to see a big old launch out of this thing at some point. And I think that's the favorable sectors to be looking at. So looking at XAU to gold ratio, this is the gold and silver miners against gold, slightly lower today. And just getting a little bit of a pullback here in the past 2 weeks. We still haven't broken the big long-term downtrend that we really, really, really want to break. GDX, basically flat today. I mean, slightly higher. It looks like it's trying to do something here. Again, we'll see if that something comes about tomorrow or the rest of this week. We've got SILJ down, but that's basically finishing a retest move. So I actually think this looks good right where it's at. So that is SILJ and the silver junior mining companies. Crude oil down 2%. Are we going to fill this gap? Maybe. We can get down to $75, $76, something around there. So I think it's a high probability. We'll probably punch lower like that and then move on up, something on the lines of that. But crude oil is sitting on top of patterns, guys. It is not. It does not look weak. It looks incredibly strong. On a logarithmic, you hit here and you hit on the top on a logarithmic pattern. I'm not going to do it because the way that this throws it all off. But I still think this looks really strong, and we're just waiting to see where this thing bottoms out and where we get that turn. Natural gas is still basing. We're at 0.8% lower. You can see that we're basically moving sideways at this point, the momentum. It stopped this gigantic downward movement, and now we're just moving sideways, basing out, consolidating. It may take some time for this before it moves up. But I will say, depending on the weather, if we get a really warm summer, we're going to be burning more natural gas. And if we get a really cold winter, this inventory could get eaten through rather quickly. So it's very weather dependent, and that's just the way natural gas plays. XOP, yeah, you know me, heading down today. Even though we had this big bullish engulfing yesterday, I'm quite surprised to see that we have selling pressure the day after. We've had some selling pressure up here, multiple selling pressure days there. Those three stick out to me. Bearish engulfing, bearish engulfing, bearish piercing. That is definitely a topping pattern on the short term. We're also against resistance there. The resistance is this longer term resistance line going here, trend line. It's a support line which fell into and turned into a resistance line, and now we could come back maybe to $100 even on oil if the markets sell off hard enough. OIH is also selling off, down 4%. But that one, you know, we've got this large selling pressure. I think we're going to roll over a little bit and head a little bit lower in the short term. Again, I don't play the short term, guys. I just look at it and watch it, try to get buying points. But there's not much big buying pressure compared to the selling pressure that we're seeing all over here. So I do think this is probably going to head lower in the short term before moving higher. That also falls in line with what yields are doing and with what the dollar's doing. The Sprott Physical Uranium Trust getting a nice bounce. We caught that nice big bullish engulfing last trading session, and we're getting that momentum today. So good work on that. And we are coming to a squeeze up here, so we'll see if this continues and if we can break up to the upside and get up around $18+. Uranium, not following suit like the physical price, but it does look interesting. I'll just say that. It looks interesting. We are consolidating. The opening and closing prices are getting closer and closer together, and we have a group of basically kind of just moving sideways, equal buying and selling pressure. So we'll see where it goes. If the physical uranium price rockets on higher, maybe it lifts uranium and the equities with it, the uranium equities. But we'll see. TAN down a little bit, still squeezing pretty hard in this corner here. So we're still squeezing up there. Copper getting a little bit more selling pressure today, that's for sure. Kind of dive bombing out. I think people are scared of something that's coming, whatever that thing is. And people are selling their copper stuff, copper stocks, copper-related mining companies. And we're starting to see copper fall a little bit as well. And we'll go over that here shortly. Lithium also beeline and lower here. We could see more selling pressure in this. We're starting to see a lot of bigger selling pressure days here. Could this be the beginning of something that's a lot larger to the downside? I think it possibly could. That's why we're seeing yields drop as well. These are all interconnected. REMX selling off quite a bit. That is also getting a lot of selling pressure. And we'll see if that continues lower. The S&P 500 getting a big, huge selling pressure day today. That to me looks like it wants to head down in the short term. And it closed very strong to the downside. Very strong. Same with the NASDAQ. Again, we were up against these resistance levels, waiting to see if we were going to break up or break down. We are breaking down, and we can see further downside in the overall markets. Emerging markets also breaking down with a stronger dollar. So heading lower, and it looks like that may continue. We'll see what happens when we get to the support level down here. XHB also heading lower, getting more of a selling pressure day to day. A lot of selling pressure across the board here, guys. Lots of selling pressure. Moo also selling down. This is one that I just keep thinking that we're going to head lower because we've got a resistance trend line. We broke out of it quite strongly, and we've been struggling to move higher, which generally indicates we want to go lower. Copper, getting a lot more selling pressure today. We're still above support. That's the support level here. And we've got a lot of support in this region down here. So even if we come back, we have a lot of support underneath us. Lumber, right at support. And we're heading on higher here. We're at 427. I don't even know if this is updating anymore, but that's lumber. Iron ore, I've got up 0.04%, but we've broken out of this falling wedge to the upside. I think we'll go down lower a little bit in the short term before heading higher. Nickel, down a little bit. And moving a little bit more sideways. I mean, this thing's just been moving sideways the whole time here. Could this be a double top? It very well could be. Maybe we have more downside if the overall markets want to sell off. Aluminum down 2%. Let's go to the dailies here. There it is. A little bit more selling pressure. Overall, guys, we've just been moving sideways here. There's your low. But just moving sideways. Baltic Dry Index up a little bit. Baltic looks really good, actually. Looks quite strong compared to all the other sectors. And then Newcastle Coal just basing out sideways 0.18%. I think we're going to do that for a little while. And then Ethereum up a little bit today. Looks like it's trying to throw in a little basing action here. Go sideways. We are at a lot of support in this general vicinity there. You can see a lot of shares are traded. Same with Bitcoin. We're at that support level where lots of shares have traded. We're back in that support zone, and we'll see if we can get a bounce here or not in both Ethereum and Bitcoin. I do think it will go higher. So that's what we've got for today, guys. I would say, without a doubt, that the strongest sectors are definitely precious metals. We're sitting on top of patterns, and the conditions are changing favorably for precious metals to go higher. That's the way that I'm viewing it, at least. Bitcoin, Ethereum look pretty strong. Oil, we'll see where oil goes. Could we get a little bit more downside out of it? We very well could. But we're sitting on top of patterns, which is positive. We're sitting on top of support, just like copper is sitting on top of support. So that's all good. Basically, if I were to sum up everything, we've got credit. So we have credit that expands, credit that contracts, things in the system that needs to get flushed out, which could impact how much credit or money is in the system. That is declining over time. That the M2 money supply is declining. That credit in the system could be declining. I mean, it's hard to say real time how these are interacting. I know total bank credit's kind of just going sideways. But that, I think, is basically facing off against the supply shortages of commodities. The supply shortages, and we can see in the prices that everything's sitting on top of patterns and it's very resilient. I think that combination of people being afraid of a slowdown, of credit contraction potentially, is what they're afraid of. Markets are forward-looking. That is being faced or paired off with the supply shortages. So what I think could potentially happen, this is just a guess, guys. It's not a prediction. It's just a guess. If we get weakness in the markets, we could see commodities go sideways because the shortages in the system. But as soon as they try to print or increase credit, I think all of that's going to flow into commodities. So they're in a very tough place. They need to keep interest rates high because of the demographic coming into home buying years in the real estate market. I think if they were to lower interest rates, house prices would go up and credit would expand. And your housing starts would increase as well. So they're trying to hold interest rates high, trying to slow down the inflation from credit expansion of the real estate market from that demographic. but they've got supply problems on commodities. And they're going to struggle to increase GDP as fast as they probably want to, as a way to mitigate how much money they need to create for the system to exist. So it's the existence of the system and the money creation and credit creation for that system to be sustaining versus inflation, runaway inflation, if they were to lower interest rates. But then if they don't lower interest rates, they create a problem for the government in terms of interest payments, which they're just going to print away anyway, which will be inflationary. But that inflation that comes in the system is going to go where the supply is most needed, which is all in commodities. That's your setup. That's what I've got for today, guys. Hopefully you enjoyed it. Give me a thumbs up. Subscribe to the channel. Subscribe to the website. Love to have you there. And we'll catch you later. This is Finding Value.